Hello, everyone. Welcome to the live stream. Today, we're going to talk about an options setup and model that I created for the KRE, which is the S&P Regional Banking ETF. I'll explain why I selected this particular ETF for an options trade in the fourth quarter. We'll look at seasonality, we'll look at the charts, and we'll go into options play, which is an options trading modeling tool to give us some idea of what the profit could be expected on this particular trade. So the first thing I want to do is just get everyone familiar with what this ETF is if they're not familiar with it. The ticker symbol is KRE, and it does hold regional banks. I'm going to scroll down to their holdings just to give you an idea of which regional banks they hold. So these are their top 10: Citizens Financial, Truist, Cadence, Popular, M&T, and then their total number of holdings is 149. So it's quite a few of these regional banks. Then I want to take a look at the chart. And this is over the last 5 years. And I also have the 10-year treasury rate minus the 2-year treasury rate. So that gives us the 10-2 spread. And what we can see here is that we did invert on about the 7th of July of 2022. And we have had an inverted yield curve all the way until September of 2024. And this is about the time that the Fed issued the first rate cut in September of 2024. The first rate cut was in March of not the first rate cut, the first rate increase was in March of 2023. And you can see the precipitous drop of the KRE in response to the increased rate environment. And then throughout 23 and 24, we did see a little bit of increase in the price performance of KRE. But now that we're in an interest rate reduction regime, I think that the regional banks are going to perform fairly well now, and that's one of the reasons that I wanted to look at this one and explore it, both for purchasing the ETF and for also trading an option on it. A viewer in a different live stream had requested some information on options with KRE. So this was a good opportunity to share my process. So we are uninverted, so that's pretty good news as long as we don't create a recession out of this. We need to keep the economy moving along and not dip into a recession, and hopefully the Fed can navigate that okay. So let's take a quick look at the 10-year treasury rate. This goes from about 2001 all the way to the current time. We can see that we have had in the past, this was during the great financial crisis, we did have the Fed target rate sitting at about 5.25. That eventually tapered off, and we were in a very low interest rate environment from about 2009 all the way until 2016. We had another rate hiking episode with a pretty sharp decrease back to about 0.25%. And then this one that started in 2022, we raised all the way through July of 2023, and we've stayed at about 5.5 for several months. And then in September, we finally started getting interest rate decreases. Next thing I want to do is take a look at the seasonality chart for KRE. I can make this a little bit larger. So I'm basically looking at 5 years, excluding this year. So I'm looking at the 5 previous years. We can see in September, it's pretty rough on the KRE. They end the month higher only 20% of the time, with a typical pullback of 3.1%. But October, November, and December are usually really good months for the KRE. So on average, they outperform 80% of the time in both October and November. And in December, they outperform 60% of the time. October, the typical price increase is 5.5%. November is 8.7%, and in December it's 2.1%. So then if I just go to looking at just 1 year, we can see that in September it was down minus 2.8%. So that kind of follows that pattern that we saw where September is a pretty rough month. And we're only 6 days into October, but we're up about 0.2% already. I want to take a quick look at a spreadsheet that I put together where I pulled these price changes for each of the months by year so we could take a look at them in Excel and put some notes along with them. So September on average is down 3.1% over this time frame. October on average is 5.56. November is 8.7, and December is 2.1. January is 2.3. We can see that the first Fed rate increase was in 2022. We did still have an increase. November was a little bit less, and we had a negative return in December of that year. We hit the peak Fed funds rate in 2023. We were down 5.4 in September, -5 in October. So this is 1 month out of 5. We'll be working on number 6 for this year, this month. But only 1 month have we had a pullback in October. And we've had outperformance as high as 15.3% in 2020. Then in November, we have only had 1 month where we had a negative return. In December, we had 2 where there was a pullback instead of an increase where it ended lower. So then if we take a look at what we could expect from the KRE, it's basically about if we look at the average, it's about a 16.4% increase is what the average is. If you add all of these together, including subtracting those that were lost, you can see what the totals are, but I don't really want to use those. I want to focus on these numbers. Then if I include December, it's 18.8%. So I'm going to model an option, and I'm going to use two numbers. I'm going to use 16.6% to model what the profit would be on that option. And I'm also going to use 10% and just see where we are. So I have a 6.4% margin of safety. So let's go into options play. And you can see I have KRE pulled up here. I'll just show you how I modeled this over the weekend. But basically, since I feel that it is going to go up by 16%, I wanted to buy a call that was deep in the money. So I'm going to select, the way I modeled it was selecting a 55 call that at the time I modeled it this weekend, it was 80% delta, or 80 delta, 0.8 delta. So I'm going to go with that. And when I modeled it this weekend, it was going to cost me about $10.28. At this current time, it would cost me about $11.65. Keeping in mind that when you buy one contract, you're talking about 100 shares of the underlying asset. So this is actually going to cost me $1,100.65. So I can go to the profit and loss simulator, and I want to have an expiration date that is far enough out into the future where I'm not penalizing myself with decay on the option. So I think this option, the way I'm going to trade it, will probably be late November or late December. So I wanted to give myself plenty of time on the back end if this option goes amiss, that I still have a lot of time without a lot of time range without time decay on the option. So I'm going to look at a couple of different prices here. If it goes up 10% from where it is today, so that would be about $69.80, and that's where it closed on Friday. I'm using numbers from Friday's close. That's when I was modeling this. So if I target that, that would be a 10% price increase. And I think it is going to take probably until December the 19th. I'm actually hoping for end of November, because that's when the largest percentage from a seasonality perspective, that's when the price should reach that, is at the end of October or November. But if I set it to December the 19th at this 10% profit level, that should give me about a $343.99 profit, which would be about 30%. If I bought the shares outright and I'm modeling 10%, then I would have a 10% gain. So since I have a pretty high confidence level in the performance of KRE in the fourth quarter, I can use options to leverage that for me and boost my return based on that level of confidence. So that'll be about a 29% return, $343. Now no, I don't want to do that yet. I want to go back here. and I want to move in the 16.2%. So that would be 73.73. And I still want to go to December the 19th. And that would give me a $724 gain, or a 62.2% return. Keeping in mind that if I bought the 100 shares, I would have, let me see what that would be. It'd give me about $72 per share, and I'd be buying them at 63, so it'd be $9 or so on those tranche of shares. If I bought them outright, it'd still be a 16.2% profit. So I'm leveraging it here and getting 62. And then one other way that I want to model this is I want to buy a put, because I wouldn't mind actually owning these shares if it did drop below its current price. It was trading at 63.78 last Friday. It's currently sitting at above 64, so I wouldn't mind owning them at 64 because I think they're going to perform well in a interest rate reduction environment. So one of the advantages is this gives me is I would get paid for this put because I'm selling it. And I can get, when I'm modeling it right now, it's $4.40. Buy 100 shares would be 440. So if I subtract 440 from the 1100, my net cost on this trade would be somewhere in the $700 range. So that's the money I need to outlay today in order to execute this trade. So once again, I can go back to the P&L simulator. I can go back to my 69.8, which would be a 10% gain. Give myself a little bit of margin of safety. Think it'll run out through December, and that would be a $632 gain, or an 87% profit. And then if I run this out to the price that the seasonality indicates, then I would be at 73.73. So my total profit would be 1,085.71, or a total return of 149. So I am, putting a little bit of leverage on this to execute this actual trade. And this morning I did actually execute this particular trade. So I'm going to go into my portfolio and I'll select the KRE and I'll open this up. You can see that I was able to buy the call for $11.65, and I was able to buy the put for $4, or not buy it, but sell the put, and received a credit of $4.35. So I'm basically in this trade for about $700. Let's go to KRE once more, because I want to move to this particular worksheet. So I actually bought 10 shares as well. I want to track this so I can make a report when I finally close this trade on how it performed. But I bought 10 shares. I bought them at 63.45 this morning. So my cost is $635. I'm expecting a 10% profit. So would be $63 on those 10 shares. Then I bought the one deep in the money long call with the delta. It was at 81 and a strike price of 55. I paid, what did I say? I need to update this. I paid 11.65 for it. When I modeled it over the weekend, it was 10.98. So now I need to update this. And then selling the put cost me $4.40. And then we already know what my anticipated profit is, and we showed the percentages for the gains. So we'll use those, and I'll enter the actual numbers sometime in the next 2 or 3 months to show you what the actual outcome was. So one other thing we could talk about, that's the end of the options trade and how I approached it and why I felt this was a pretty high conviction trade. We'll see how it works out now. You don't always have to do this through options yourself. You can do some outsourcing. So I also felt pretty strongly, if we look at the seasonality for TNA, or let's do SCHA. This is a small cap, the S&P 600, basically. You could think of this as like the IWM, the Russell 2000. The reason I like the SCHA is it's only 600 and they filter for profitability. So they don't have small cap companies that aren't yet profitable. So this is the one I bought earlier in the year. And because I had a pretty high conviction on small caps doing pretty well in a rate reduction environment, and looking at the seasonality, it looked like a good trade. So we can take a look at where I stand on that particular trade. I bought basically 100 shares between November of last year and March of this year. And I've had a return of about 6.9%, and they paid dividends of 0.8%, giving me a total return of 7.4%. Then I had such a high conviction in the small caps doing well that I purchased the Direxion small cap 3X bull. So I'm not buying the options on these. I'm letting this particular manager of this fund do the options trade. So you can outsource this if you can find a bull or a bear leveraged. These are not to be held for long term. So you can see that most of my trades are closed out, but I do have 2 open trades remaining at 100 shares. And I bought these about, I'm not going to say the same time, but I bought these about the same time that I had my conviction that the small cap stocks would do well in a rate reducing environment. But you can see by using leverage that I don't have a 7.5% return, but a 23% return on this tranche, and a 16%. I bought some a little later, a couple weeks later. and I'm up 16% on that for a total of 20.4%. So this is the same concept, except I'm outsourcing the work of modeling and actually creating the options. So that's my overview of what I went through this weekend, and tried to model this and see if it was a good fit for an options trade and to also buy into the KRE. I do own some other financial, so I didn't want to go and pick individual banks. So that's why I decided to look at this KRE and make a decision to move forward with that. Thank you for watching. I hope you found it helpful. If you have any questions, be sure to drop a comment and let me know, and I'll do my best to answer them. We'll talk to you later. Bye.